You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
I'm Joan Rivers to Mark Longo here. Russell Rhoads is going to host today and do the very best that he can hosting, and everybody in the chat is going to be nice about that one. Picked a pretty unvolatile week to hand over the reins to me. But before we get into all of that, in addition to me being a guest host, we're having a new guest. Mark, I don't know if Mark and Andrew and Mark, if they're just hanging out on the beach, listening to us, laughing at us right now while we're still in the office on, I don't know, a beautiful day in Chicago. But Hans, is it Hans or Hans?
Hans is good. Hans,
okay. I went to school with one of my really good friends in high school was a Hans, but he liked to be called Hans. I think it's because his last name started with man, and it kind of rhymed. But you're with the fellas over at Option Pit, and since you're new, I'm gonna let you can talk about yourself for 55 minutes if you want, but maybe give us a brief background on what you've done and what you're doing now.
I don't know if I have that much to talk about, but I am not an evil Hans. Usually Hanses are like, from the movies, Hans Gruber and the other one from the Disney cartoon. I am actually a good Hans for a change, so I'm proud to say that. I have a pretty deep background, market maker background, like the other two guys at Option Pit who are slacking off today, obviously. About 15 years as a market maker, 6 of those on the floor. So back when, we had floors and things like that and hand signals and pre-automation. So really, cut my teeth on the floor there, really learn the business, learn the math behind it and the emotional, backdrop that you need to get through a day of being a market maker. So a lot of long gamma actually, because I started in Canada and that was really, really a kind of vol supply kind of environment. So it was really, you were kind of the buyer of the last resort. There wasn't a lot of liquidity and you ended up just kind of loading up on gamma. Of course, back then you didn't have all the bing bong machines kind of getting involved. So you're able to sort of set your prices to where it did make sense. So it was good, and markets got more volatile throughout the late 90s, early 2000s. So that was good. So a lot of long gamma trading, wonderful volatility that we had back then. And then so did that, and then eventually ended up managing up to at any given time between 9 and 12 covered call funds, downside put scalping, and a couple of black swan funds as well. So a couple of funds that are long equities, trying to capture that downside for the sell-off that never really came in that decade, the 2010s. We never really got the big sell-off in that QE era. So could have had a little more fun in the Black Swan fund, but it is what it is. And yeah, so here I am working with Mark and Andrew and Leisha and the gang over there. We've got some products. I just did a show this morning, so it's great. It's good fun, and it's a good group. Lots of those market makers. So we have that depth of knowledge that we think is very beneficial to clients.
Were you on the floor in Toronto?
I was.
Well, so you were, and one of the things I think was that the one where they actually had, unlike us, we have the CME across the street from SIBO, and now they're in the same building, but they're on a different floor. But you guys had the futures trading next to the options, which I feel like probably made things a little bit smoother in that market than in our market, where you have to go from one market to the other.
Yeah, it was.
Am I correct on that one? I never visited it. That's just that's my understanding about that floor.
That's right. Yeah. So there's the big floor where you had that, and it was kind of cool on the very big floor, not the original one on Bay Street, but the other gigantic floor you had, which is mostly stock trading, and then in the corner were the sort of unwashed options traders, kind of don't ever talk to those guys. They're kind of in the corner there, and not far from there, the futures. Yeah. And then the same sort of thing, I moved to Montreal and did it as well. And it was more intimate environment, but we were literally right behind the futures guys as well.
Pretty physically. I forgot to ask before we got started.
What's that? Sorry.
Where are you? Typically when Mark is doing the intros, he likes to say we're going to the suburbs of Chicago when he talks about me. And
I am in the 51st state of Canada. So I'm up here on the north coast of beautiful Lake Ontario.
Okay. So you're just right across the lake from us, basically. Okay. Yeah. Oh, in the 51st state. I was going to avoid all of that because I didn't know you were Canadian. I was going to avoid all of that today.
That's all right. We have a good sense of humor, and but as our new prime minister said, I think Trump it was funny, the interview the other day, he said, "Well, never say never," and the prime minister said, "Well, it's never." So it was a little back and forth. It was a little awkward, but it was kind of funny in the end. Obviously, it's not going to happen. Not in the next 50 or 100 years. I don't think.
I think we just need to continue to be really good neighbors with no fence, because there's too long to put a fence up.
We're already connected in so many ways. We don't have to make it official.
No, we don't. So kind of, it's in this day and age, there are a lot of people that they have kids together, live together, but never get married. That's the Canadian-American relationship.
Exactly. But Trump sort of tipped his hand there. He said, "Oh, you've got all that wonderful land, and I'm a developer, so." I think he's kind of getting excited about chopping down some trees and building some casinos. So, there's a lot of room for that up here. But, we figure we need trees, right? We keep cutting down trees, and no one's like, don't they make the oxygen? So, yeah, that could be a problem at some point. So let's keep a few trees.
There's a happy balance in there. All right. With that, and with the getting to know you part, we're going to move forward with, I believe, the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
So where are we at VIX wise right now? We're down slightly from the last show. One of the things that Mark's been saying when we do this segment every week is you never know what's going to happen. If you blink, everything's going to change. This Friday and this week has not been like that at all. It's been a pretty low volatility week. In fact, I would say it's been the lowest volatility week since the tariff announcements. Which I guess is not shocking, since it looks like we're starting to get tariff agreements. I got a few minutes ago, we had VIX at 2238, down 37 cents from the last show. Probably if you play the crystal ball, guessing where we were last week probably would work well. That used to be my strategy. I've tried all kinds of strategies and it never worked. The Volley Index is at 1944, the one that pays a bit more attention to the at the money option contracts. It's up slightly from the last show. That's kind of interesting. And then VVIX is still hovering around 100. And when I get into the weeklies and the option trading activity, we'll see why it seems to be maintaining a relatively high level. As VIX has come down, it looks like people are taking advantage of that through getting long exposure using calls again. Seems to be more call buying and long exposure using calls now that VIX is in the lower 20s. Hans, anything that stood out to you this week with respect to VIX or any other? And if there are other volatility indexes that you watch very closely, I watch V stocks closely and the NASDAQ volatility and the Russell volatility as well. Feel free to chime in on those as well.
Yeah, I guess I'm a VIX guy. Big roll that we saw yesterday. I don't know if you saw that, Russell, but we had this, somebody rolling out of their Mays and into Julys. So maybe kind of, keeping maybe a little bit of a bid in the futures to some extent. So we are absolutely seeing people take this as an opportunity to kind of rehook some of those hedges, right? We've had this amazing drop off in realized vol. And that's kind of where I've been the last few weeks. I was kind of bearish around 510, and then I flipped pretty quickly because it really looked like this sort of existential fear. We saw daily ranges that we haven't seen in probably 15 years in the S&P, like kind of crazy ATRs. If folks out there watch the ATR, average true range, we saw levels that we hadn't seen in quite a long time. In fact, I think they might have been more than double August, which was that big swoon we had on the Japanese carry trade. So there was, in my view, I kind of felt, there's a little bit of potential sort of unwind of bearishness that could happen. So I've been sort of doing some broken wing flies and things like that, and just kind of playing that little inch up, and sorry, my phone keeps going off, and sort of just kind of sort of playing for those quick dip buys. Which is hard to do, right? When you saw that volatility that we saw a few weeks ago. But I think it's an interesting time. I mean, the futures curve. Are we talking about the futures curve at this point, or I don't know?
Just a second, but you can go ahead. I do that to Mark all the time. I'll start talking about the other markets, but fire away on the curve. We are
tangent. I will go off on so many tangents, you won't believe it. Okay. So that's how my mind works. Very disorganized. My wife hates it. So anyway, sort of we've had this kind of, come down in volatility, and we've had some of the more systematic things that I think have been very important to this market. So I think as we talk about the dog and the tail and our options, the dog or the tail, or maybe they're the dog now. They are moving things, volumes, notionals larger than equity trading at this point. So I think that's why some of these things have gotten very popular, the gamma, watching gamma, and all this stuff that, we used to do as market makers. We're like, really? Is that called Vanna? Like I didn't learn it to that degree, but I knew what it was. I knew the Vanna and the charm. I felt it. I knew how I had to be aware of it. It's just kind of funny. I didn't even know the Greek back then. But now it's kind of a big thing, right? People talk about all these secondary Greeks and all this stuff. And I think it's important, right? And on top of that, you've got these other sort of structural, synthetic gamma that's pushing things around, the levered ETFs and CTA and vol targeting and all that stuff. And I don't know if you ever talk about those things, but I think they're just, they're bigger than ever, and I think they make a big difference. So.
No, absolutely. Hey, you touched on something, and I hope I'm not throwing you too much. You can just say, no, I don't do that. You just mentioned the carry trade, and I just finished, I'm not the lead author, but I just finished a paper working on the paper on the carry trade and how it's as much of a fear index as VIX. So is that something you pay attention to with respect to, how fragile the financial markets are, et cetera? Or
I do.
And we're specifically looking at the yen one.
Yeah, I mean, I don't dwell on it too much, but I think the shot across the bow is that it's something to watch, and I think that certainly as volatility traders, we're always sort of looking for, well, what's that next shoe to drop? And so that was a big shoe. And, coming off of, I think it's hard to deny that we have come off an incredibly exceptional period of stimulus, and the Fed really kind of always coming to the rescue, and this has sort of created a real world of reasonably low interest rates and borrowing and debt levels and all that. So if we are truly coming off of that, I think there's always the potential for more breaks in the plumbing, right? There's something could break as things start to unravel, because we raveled in the right direction of take more risk, just keep going. They've got our backs. And so if we are in a world where that is finally coming to a head and debt levels are indeed too high, and et cetera, I think we have to concede that there could be more of those types of situations around the corner as things start to rebalance. I mean, there's a president who wants to rebalance the world. He wants to rebalance trade. He wants to rebalance the way things have gone over some time, globalization, et cetera. So I think we've got to be ready for that. And, we're keeping an eye on yields. I think they're a concern. And I agree, Russell. I mean, specific to that, yeah, there's that, more of that could happen. But I think also more broadly speaking, I think we've got to watch for other. I mean, think of shadow banking. I mean, that's just gotten bananas large up here. I mean, there's stuff going on that we don't even know. So these are vulnerabilities that exist that we have to keep an eye on.
A little bit of a deviation from the volatility stuff, but you got a lot of companies that need to refinance their debt, and interest rates not coming down like they probably had hoped. I think that's something that's an overhang for some companies. And somebody declared bankruptcy yesterday because they weren't able to read a technology company. But we've been talking about this at the business school, and we do think that there are more of those to come, regardless of whether interest rates come down or not, because that's the way a lot of companies like to finance themselves. 5-year bonds, good rate. And then when those have to be repaid, issue more bonds. But in this case, it's kind of like a lot of people don't want to buy new houses right now. They've got a mortgage rate of 2%. Why would they want to go to a mortgage rate of 7%?
Yeah, and that's something you guys have different from us. We tend to. I mean, we are pushing that a little bit more, but that's going to be a problem in places that don't have that sort of longer term, that longer duration, sort of predominantly longer duration system. So you get that refinancing requirement. That's a big, it's going to be a big difference from 2%, like you say. And I think kind of strangely enough, that may, if we can get rates down, we may unfreeze the real estate market a little bit in the U.S. But you're right. I mean, and that's the thing. They're sort of watching things like the Russell. I know Mark likes to watch the Russell for a sign of almost like a broader, it's all is okay signal. And precisely because of what we're talking about, 40% of companies in the Russell, I think don't make any money, and they're very, very dependent on rates. And so, we kind of, in the last couple of months, we've sniffed out the possibility that rates may come down, and that was okay for Russell. And then when it looked like it wasn't going to happen, the Russell's been struggling. And the fact is that a very large part of the population works for small and medium businesses. We hear the headlines are all the Googles and those companies, but a lot of people do work in a part of the economy where interest rates matter. So it's a bit of a concern, right? If we have this sort of higher for longer, and then even worse, stagflation, that's not good, right? That's not a good situation. I don't know if markets are just kind of in denial a little bit of the reality of that. But that is not a good outlook for the economy. And so I think we have become sort of a please cut rates and please get us some deals. And I think the market is just kind of going, it's expensive, right? The market is expensive. If we see earnings come down, it's expensive. Now, data's been okay. We pulled forward all this demand. So all the data is kind of rubbish at this point because we've just bought so much crap ahead of the tariffs that the data is kind of a bit murky, wouldn't you say, Russell? I mean, it's a bit like...
Well, most definitely. Most definitely. It's going to...
we don't know.
The lack of reaction to some of the economic data getting a negative CPI, and the market didn't really even seem to care that much. Those types of things, I think there's because of the business that we're in, we always get these questions, and God knows I do, because I've got tons of students that are asking me these things. What are you doing with respect to the tariffs? I'm sitting around waiting to see how these things work out. You don't have to trade every day. And so I've taken size down and everything that I do to a very, very low point. And that leads me to, I don't think anybody else knows what my lead in is here, but you did bring up the futures curve a minute ago. And I kind of pushed you out. There anything else you wanted to say with respect to the futures curve and what you're seeing in it?
Well, it's clearly not super pleased. I mean, it's a little better. It's kind of a bit kinky right now, if that's a word. The futures curve is kinky. So, it's looking interesting. I think it makes still, VIX, some upside VIX trades still kind of, paints a picture for them of and you kind of have that head start, that gravity going the right direction. So still not a bad place to maybe with VIX at 22 and a half, that kind of can compel you to maybe put on some of those trades as well. Upside call spreads in VIX are pretty reasonable, I would say. You look out to July, like it's the usual, right? Because the VIX tends to not spend much time at 50. But so you look at these spreads, you go, wow, $2 for something that could make me 22. Well, yeah, the reality of it is we know we're not going to make 22, but things are still pricing well. So I think at this point, you kind of have you've got cross currents, right? You've got cross currents. There's the VIX isn't super happy, but then we've come off this crazy period where maybe there's a little bit of vol echo just kind of sitting in there, as well as the reality that the market's a bit on borrowed time. So we need these things, as we've been just talking about. We need some deals. We need some visibility on earnings. And so if we don't get that, it's kind of a matter of the economy is almost like an eroding asset, like an option at this point. If you don't get better news and things going in the right direction, the economy will start to erode a little bit in terms of what it can handle because of tariffs, et cetera. But it's a rejigging of supply chains. I mean, there's all kinds of stuff. There's a report out that China's, now selling way more stuff to other countries instead of the US. So it's a very much a situation in flux. And I think, high rates, I think the VIX futures curve, I think some things are still telling you that the coast is nowhere near clear, despite the fact that stocks have run up.
Yeah. No, absolutely. And then something that I push on an awful lot, and I need to fully quantify it. But when you called, and I just wrote down Kinky Contango, which I think is going to be my my cover band name. I like that.
I like that.
So whenever VIX is, and it's been like this for weeks now. I can't remember us having such a flat curve for such an extended period of time.
Yeah, and after an 800-point rally too, right? Like after a big rally. I mean, I know that's realized vol, but it's that's a big rally.
And then the other thing that we were up 9 days. The S&P 500 was up 9 days in a row, and VIX is still above 20.
Yeah.
Yeah, those are the kind of things that I like to run on the weekends, where I'll look at SPX win streaks and what the average VIX is around there. I will almost guarantee that we haven't had a 9-day win streak for the S&P for about 15 years, but I will almost guarantee that we probably don't have situations where VIX was, much higher, above 20 very often if we have like a 5-day win streak, et cetera. That just seems to be an outlier. But to me, there are times where VIX is a bit more anticipatory than reactionary. And I do feel like we're in an anticipatory environment right now. And that might be indicated by the flat term structure as well, where the futures guys just aren't really sure what's next.
Yeah, that's your picture of a big shrug. That's what that shape is. It's a shrug. The kinky contango shrug is, well, we're not quite sure where things are going. Now, I think when sometimes equities are sort of in their own world. Are they the smart money? Are bonds, is fixed income the smart money? I don't know. Equities can kind of they can have these incredible bear rallies as we saw in 2022 and other sell-offs. I've seen too many sell-offs in my time. So this is, this wouldn't be out of the ordinary for a bear market, rally. It's possible, but it's not that surprising. You look at the upside, you look at upside skew. So call skew has been extremely cheap for the last 300 or 400 points. Like they've left the right tail for dead and they just keep focusing on the left. And if you look at, there was one slide that I saw, it was Goldman put something out and they showed the AAII, which has continued to be very bearish, right? So that's bearish sentiment indicator. That's a survey. They have, I don't know who the respondents are, to be honest, but it has remained, it's bounced a little bit, but it is still very much in bearish territory. And they said that 11 straight weeks now, we've had 50%, greater than 50% of respondents have been negative on the market. And we have never seen anything like that. And they showed a chart going back to like 1988. We have never seen anything like that. So this rally, warranted or not, based on reality, the economy, whatever's going on in the world, has been everybody just being on one side of the boat. And when everyone is bearish and there isn't a single person left to be bearish, well, the market's going to do the opposite. And I'm sure with your students, Russell, you often get this question like, why is the market doing this when there's bad news? And there's always that's always the sort of layman question is this disconnect between markets and reality, and how long can that last? And why does that not make sense? And that gave birth to one of the greatest concept maybe that I've ever heard, is that never underestimate the market's ability to climb a wall of worry. That's just what it does. It's flows, it's money. The money got to go somewhere. And so it's just sort of been almost like a low participation rally in a way where no one just believes it. And I'm not sure what breaks that one way or the other. I'm still figuring that out.
Yeah, we got to move to options. We're definitely going to fill the hour. I had a feeling when we got started that would not be an issue. But just with respect to, goodness gracious, my brain injury thing just kicked in. You're going to have to repeat what you just said. I know it sounds terrible, but that's just part of what happened to me. We were just on the
the bearishness.
Yeah, the AAI date, that's basically their it's a membership of a bunch of individual investors that really are more long-term focused. When I was at SIBO, we would work with them every once in a while. Okay. And the bullish number, oh my goodness, I mean, in March it got below 20%. I don't know the last time that, I just pulled the chart up while you were talking about it. I don't know if it's ever.
Yeah, well, 11 consecutive.
There's in 1989, I think that's the long-term capital, was the only other time it's been this low. Not even during the 2008.
89, 97?
90, well, 90, it's 98, 90, 98, 99. Maybe that's the beginning of the...
that was long-term capital. I think you're right.
I think that 90 was long-term capital, but 98 was long-term capital. I'm not sure what happened back in 89 to make everybody bearish for 1 week, but that's other than that, we haven't really been down at this level in a long time.
No, it's pretty amazing, right? And we've had such an outgoing, like the money, the foreign money that. It's funny, I saw a chart the other day of how much foreign money came into markets at the end of 2024, and it was like kind of eye-popping, right? The foreign money, the retail participation, the retail optimism on stocks back then, it went parabolic. So it was almost like, remember Volmageddon? Everybody went all in on those products, and then all hell broke loose, but it kind of looked like that. So, everyone, and then this outflow of foreign funds now, that is another big question hanging over us. I kind of feel like it's going to reconsider at some point, but
some point, maybe, as we start to make nice with everybody, which is I think the United States will start to do. Maybe not perfect nice, but pretty nice. So just flipping over to options, it has been a quiet week. In fact, the producer double checked the numbers because they look so low. On Monday, we've been doing 7-figure volume in VIX options on a pretty consistent basis for weeks now. We've only had one day where we had 1 million contracts, and that was on Thursday, which was surprising to me as well. But Monday, things started out kind of quiet. We had 413,000 contracts traded. Tuesday, only 313,000 VIX contracts.
Wow.
And that's in front of the FOMC meeting. And then on Wednesday, things picked up a bit, 631,000 contracts. As I mentioned yesterday, Thursday, we did trade 1 million. I looked at that rolling transaction that you were just talking about. That it looks like that was about a third of it. It's where they rolled from owning the 35 calls that expire in May to the 35 calls that expire in July. So it sounds to me like somebody that's betting on maybe an outbreak of World War III or something thinks it's going to happen in the summertime and not the spring. They're looking for something there. And then today, only 315,000 contracts on the tape as of about a half hour ago. Biggest trade. And what's surprising to me is the biggest trade was actually 24,000 of the August 20th, 24 calls traded. They've been trading on the offer. I don't have the price, but that would be another, as you mentioned, there are a lot of bull call spreads that seem to, or a lot of bullish option activity. The stuff that I review, and I'll go through the weeklies in a minute in a segment that I do on here, I think 80% of the trades that I saw were bullish in one fashion or another on VIX. Going through the top VIX positions, we've got 6-4 calls over puts. And when Mark says this, he always said, when he goes through this segment, he always talks about the proprietary indicator. And I asked a while back, I said, if we could take the top VIX positions and in that ratio, I wonder if we could use that as some sort of signal. And we haven't compiled the data to do that yet. So you guys got to beat up on Mark to help me determine the data. But usually there's more calls than puts. The top, or I'll go backwards. Number 10 on open interest wise, we got 154,000 of the September 17th, 80 calls. Wow.
Wow.
Which, yeah, that's I think that typically those positions are put in place for risk management purposes. Risk managers want to know exactly how much you can lose, and if you are selling the 40 or 50 calls, maybe you have to go out and buy those 80 calls. I also I've got a student that is getting ready to be heavily involved in the stress test process for a bank, and I want to find out if VIX from her. I want to find out if VIX options are ever utilized as part of the stress test, and maybe that's why we see out of the money calls being purchased. I do think sometimes
that's your prepper trade. That's the prepper trade. You buy those, and then you crawl into your nuclear bunker with your with those food kits that you can get at Costco that give you like 3 years of food, dry food. That's the prepper trade. Although I think we saw some hundreds trade. Not that.
No, we have. They're on here too. We'll be there. We'll get there. They're on the list too. So there. Number 9, the May 18 puts. Number 8, the strike you just brought up. The June 100 calls. There's 163,808 of those call options open. Number 7. Again, on the call side, the May 20 calls. I think there's always a 20 call in the top 20 list, even when VIX is in the low teens. Number 6, we've got the June 16 puts. People really looking out to June at 170,000 open interest. 171,000 of the June 50 calls are open as well, and that number actually increased last week. One of the few that the open interest increased on. The May 20 puts are number 4 at 194,000 contracts. I believe this is the option that was involved in your roll. The May 35 calls, were they rolling the 35 calls?
Yep, they were.
The open interest, they made this open interest number of 196,000. There's about a day lag on them updating those numbers in the data services. So it's very possible that option will be falling off the list next week, just based on the activity yesterday. Number 2, they've got a put option as number 2, 197,000 of the May 17 puts And then finally, the number one on our board, August 20th, the 42.5 calls, 362,950 of those. I mean, they're that one is in number one by about 155,000 contracts relative to number two.
The 17 put really, is, I think Andrew was the 17 put. He likes to play that.
That's his whole size? Yeah.
Yeah, that's him. That's him on there.
He's slinging around 100,000 lots all the time. So now we get to, you ready for the music, Jane? And it's not going to be a mistake when she plays this twice. But now it is time for my weekly rundown.
Now, Russell's weekly rundown.
At this point, Andrew laughs hysterically. And Hans, if you stick around long enough, you might get intro music as well. So as I go through some of these trades, feel free to just chime in and say, I like that, I don't like that, etc. On Monday, and I've been seeing this a lot, where there are Monday trades that really do look to me like they're focused on holding through expiration. Somebody bought 280 of the May 7th that expired this week, 15 calls. They paid $8.50 for them when VIX was at 23.14. It looks like they held them through expiration, and settlement this week was 24.65, which means they paid $8.50 for a $9.65 settlement. So a pretty good trade on that. Another trade looking like they were targeting, because this was an opening one as well, looking like they were targeting VIX settlement going in the opposite direction. Somebody bought 1,000 of the May 7th 22 puts for 16 cents and sold 1,000 of the 21 puts for 4 cents. This happened when VIX was at 23.01. And it looks like they held this position through settlement on Wednesday morning and were out the 12-cent cost. And then I start coming across all these trades looking for a May spike. On Monday with VIX at 23.12, somebody bought 100 of the May 28th 24 calls for $1.77 and sold 100 of the 29 calls for 98 cents. They spent 79 cents on this trade. And get VIX above 25 is definitely going to look good for them if they want to trade out of it. So just a trade looking for some sort of spike in May. Tuesday, late day with VIX at 24.89. Pretty good trade that looks like it was an entry. Somebody sold 100 of the May 7th 24 puts for 14 cents and bought the 23 puts for 4 cents. Now that's taking in a dime to possibly lose 90 cents. But, and this is, half the reason I do this program is it gives me all kinds of things to work on. But I'd like to take a look at the VIX settlement on Wednesdays when the FOMC announcement is going on, because my assumption would be you don't really see a whole lot of people selling SPX options on the open on the day that we're getting the FOMC, and that might result in a consistently slightly higher settlement on that day and would lend people to do bullish trades. So this one worked out well, again, with the 24.65 settlement. I think, with VIX in the upper, pretty close to 25, that it was a safe bet, even though I'm not really wild about risking 90 cents to make 10 cents on that trade.
I think Wednesday, some people are. Some people have just been betting on a continuation of this sort of compression of vol. We've seen some very short-term kind of put sales, S&P put sales. So I think people are they're not betting on what might happen a month from now necessarily, but they're figuring, we're going to probably go into May expiry kind of, a bit of ho-hum. And that is lending some support to markets because, of course, the dealers, pick up those puts. They need to buy futures, buy stock. And so there's a bit of a replenishing of gamma, right? So there's a little bit of, and the gamma profile hasn't been very good. I don't know if you guys ever talk about that, but it's been sort of.
Oh yeah, the other guys talk about gamma a lot more than I do, but my time frame's a little bit longer than them.
Yeah. Well, and that's it. You can look at gamma. You can look at today's gamma. You can look at gamma over the next 6 months. So there's all kinds of gamma. that you can place importance on. But the gamma profile is sort of kind of negative across the market. But shorter term, I think they're getting replenished with a bit of positive gamma, which is helping to support things. So, to your point about these trades, I think people are just kind of saying, well, we're gonna just kind of settle a little while longer before we get some decisions or something that might be more market moving over the next few weeks, which is probably why people are positioning in June. And some people are mandated to do it, so they just do it.
Going out to June or even July. All right. I'm on Wednesday. Let's see, Wednesday, late in the day, somebody bought 100 of the May 28th, 21 calls and sold the May 28th, 30 calls. The net cost on that trade was $237. And got a 23.37 break even on that. And then somebody that seems to be expecting, and this trade happened after the FOMC announcement. Somebody bought 750 of the May 14th next week, 26 calls for 92 cents, and sold 750 of the 34 calls for 23 cents. That was a net cost of 69 cents. For the really short term ones like this, I almost would try to trade around them. My preference for something like this would be to buy a call, and then if we start, and then put the short leg on if we start to get some sort of move to the upside, especially when you're talking about options that are under $1. I feel like when I was at the Options Institute, we were always told to never teach people to leg into things. I've always liked to leg into these. And in fact, if we got a spike up on something like this to the low 30s, I'd sell the 26 call and then buy a farther out of the money call and turn it into a bearish spread. So that's that. So I kind of like this trade, but I would want to, with the weekly, with options that only have, in this case, 5 trading days left, or really 4 trading days because it was late Wednesday. I'd actually maybe think about foregoing the call sell. And then also, if you get a huge spike, it's easier to monetize just a long option than one of these spreads.
Yeah, I do tell people that as well. They look at the spreads and they go, well, I can cut down on the cost. And I say, well, listen, you got to figure out, what do you want out of your VIX? Do you want protection? And grab the convexity. Don't bother with a spread. Just give yourself that explosive potential. That's really, so you kind of have to figure out. I know some people do 1x2s on VIX. And I don't get that all the time, but grab the convexity. I agree with you. What's the point in selling that? Sell that other call for 50 cents. Like just strap on some convexity and live with it.
No, but the unfortunate, and when I run tests, et cetera, on bullish type of VIX strategies, when I look at spreads, if you're looking at a bullish trade, if you're looking at a bullish systematic approach with using VIX, your win rate's going to be very, very low. And you need some substantial winners in order to make up for all those small losses. When you start capping your profits in VIX with vertical spreads like this, it always ruins the systems that I'm trying to put together. That's for certain.
That's interesting. Yeah. Well, it's a different beast, right? Your VIX is a different beast. You're kind of playing for, like, if it's a downside S&P, okay, a spread makes sense because it's very directly related to a strike that impacts your portfolio. VIX is sentiment. It's all this other stuff. So it's mean reverting, right? Market can go down 1,000 points, and then the VIX can go from 50 to 20. It could happen, right? So it's I explain to students, a very different animal that needs to be monetized, right? I think we can probably agree. You need to monetize VIX.
Got to be prepared to monetize your trades in VIX all the time. One final weekly trade, and I actually, it's a continuation of that long the 26 and short the 30 calls on Thursday. With VIX at lower levels, somebody bought 3,000 of the May 14th 26 calls for 39 cents, and sold 3,000 of the 30 calls for 14 cents, and that was a net cost of 25 cents. So another trade using those May 14th 26 calls on the long side, but selling a lower strike call against that.
What was
and
the low?
that did look like an entry and not an exit.
Okay.
Due to the open interest.
Yeah, you can get fancy schmancy. I think you keep it simple, but we see this, right? This happened into the election. It happens occasionally where people start to really, they press that front part of the term structure to try to finance some of that longer, more data news thick part of the calendar. And I think that can work, absolutely work. But sometimes you'll see them compress the near-term fall to such an extent that pricing in almost no move, and rather not sell vol that low.
And then, people learn lessons around that. We'll just leave it with that. So now we are going to move on to the VIX ETPs. Are there any ones that you're particularly friendly with, and ones that you don't like, etc.?
And I like, I always get questions about the SVIX, the SVXY, and of course VXX being very popular. So it's been a very difficult, 8 or 10 months for those products.
Oh gosh, yes, yeah,
it has.
We even had a week recently where like both the long ones and the short ones were down on the week, with a couple of exceptions. That weird compounding thing that happens with those funds. Sometimes if you have one really violent day, to the downside, the long funds can't make it up. Even it's one of those funny anomalies that occurs within the VIX ETPs. I'm a big, everybody on the show knows I'm a big SVIX fan. I have a minimum position right now, but over the long term, you've got short volatility does work out. It's just taken a while for it to get out of its way. Typically, going through the current SVIX options that are open, the top one has almost 14,000 contracts open. It's the next Friday's 15 calls. I guess that's not particularly surprising with the fund at 1329. I'll bet you, actually looking at the data breakdown, it looks like the majority of those are not a big majority, but a good portion of them are short. I would assume people selling calls against buying SVIX, something that I've been doing a lot of when I add to my position. I don't mind getting out a point or two higher and taking in a little bit of income. Top SVIX trades, nothing. There's actually nothing on the list. It's unfortunate that the volume hasn't really picked up with SVIX. I was extremely hopeful for that to trade around once they announced that this was going to be available to everybody. Have you looked at VYLD at all? I could really get picked on about this.
VYLD, no, not really.
It's the brand new one that's just, it's your grandfather's volatility fund. I just made that up. It'll grind higher over a long period of time, and the drawdowns aren't as bad. It definitely underperforms the other ones due to its structure, but I do think it's and I know when we're on an option network where everybody's big fans of leverage, etc. But I do think it's a decent way to have short volatility exposure over a long period of time. It's up a whopping 20 cents this week, but 20 cents a week, if that happened every week in a year, that's 40% return. I don't think it'll happen every week in the year.
And these are great products when you understand them. I mean, this is really one of the big black holes for retail is really not kind of understanding these products. So that's where you want to get it. You want to listen to the show. You want to check out Option Pit. People who really understand this. Andrew loves trading these things.
I know.
And he just loves it. And he figures out, he's got his spreadsheets to figure out, well, there's about this much of roll yield. And so we should get here by 5 days, 10 days. So you really want to know that. That's a great way to kind of go, well, we're probably not going to get past this point. So that's where I kind of sell a call. Now, the market's a bit efficient. So it's not going to give you, a 10-star trade on something like that. But if you understand how they behave, then you can kind of trade options around it a little better, which I'm sure is what you do, Russell. But it's they're a little bit tricky, and they've kind of succumbed to the volatility that we've seen, right? The realized volatility, just like the sort of levered ETFs and things like that have just been chopped to pieces. And I always try to explain that to folks because they don't realize the SOXLs and the MTXYs and some STXs and all these levered products really do have that realized volatility decay that you have to deal with. But yeah, I like the SVIX. It's had a tough run.
It's had a tough run. I think it's good for the long term if you just. But I used to deal with a very southern broker who would say, buy that stock, put it in your pocket, and you'll have a double in 5 years.
Like XIV. I tried that with XIV. I don't know what happened.
Bad things happened. It's all about price target and timing.
Well, that's the thing. That whole sector isn't not nearly as big as it used to be, and they have some fail safes a little bit now compared to Volmageddon days. So I think they're a little better to get into, but I like those. I mean, look, under the right conditions, you can outperform the market, right? The idea is to be long volatility under the right conditions, and short volatility under the right conditions, and hopefully get out. You start getting a bit of backwardation and the VIX curve, and get various signals that can kind of get you out before those big drawdowns that can be awfully painful. But it is sophisticated to try to time things like that for sure.
We're bumping up against time, and I did want to bring one thing out of the volatility voicemail, which is, did you ever cross paths with Alex Jacobson, who was the first instructor at the Options Institute at the Chicago Board Options Exchange? He basically started that. I did not overlap with him work-wise, but did you ever have to get to encounter him? He's a little bit before our time.
Myself? No, not myself. I don't recall.
I just wanted, somebody, it's in the volatility voicemail. Any thoughts about the passing of, his nickname was the Viceroy. And I do have thoughts around that. I was fortunate enough to get to work at the Options Institute. I would see him at periodic events, and there has never been a nicer person in our industry. And that's saying a lot, because there are a lot of people that aren't particularly nice within our industry. One of the most helpful people around. He started like I mentioned, he was the first instructor at the Options Institute at SIBO. He did move over to the ISE as an instructor for them when they started to launch an all electronic exchange. And the ISE did a service to the industry, maybe not to SIBO, but to the industry, and really ushering in electronic option trading. My funny Alex Jacobson story is he had and some people won't even know what this means, but he had the license plate Dr. OEX. Yeah, you know what the OEX is, but he had that. And my understanding is when he left for the ISE, for the International Security Exchange, for the ISE, and there was it was pretty heated between SIBO and ISE for some time. But when he left there, somebody in upper management wanted to figure out how they could get that license plate away from him. I just always liked that. Yeah.
Dibs on the license plate, right?
Yeah, they wanted the license plate back. So yeah. But yeah, just Alex, he's just one of the best guys within the industry, etc. Yeah. So are you familiar with the crystal ball?
The crystal ball. Are we making predictions on VIX for the market?
We are making a prediction. So this is going to make me sound so. Do you have real-time quotes, Hans?
What's that, Russell?
Do you have real-time quotes? I don't have real-time quotes on my machine at home.
Yes. Let me know.
Where is VIX right now? You're impartial because you're not participating, so I can trust your answer.
VIX is 2227, as far as I can see.
2227. Oh. So last week, that means we've got no winner from how I understand how the rules work here. So VIX is at 2227, and the closest I think is Andrew, who was at 2099. He was really pushing the low end there. Mark Longo was 2466, and I was at 2569, which that was the number of my address growing up. That's the kind of analysis that I put in here. Typically, whoever wins gets to go first. I came in last place last week, and you're a guest who graciously filled in for us on short notice. So fire away at where you think VIX will be at this exact time next week.
At this exact time next week, I am going to say 20.58.
Oh,
I'm taking the low road.
You are taking the low road. So, all right, I'm going to do 20.59. No, I'm kidding. I'm not doing that. They're actually typing it where nobody else can see it right now. I'm going to go with 22.26. And that's good, because my wife grew up at 222 6th Street. I
like it. I already have.
There's always all kinds. Although I think if you ran a back test on the best way to play this contest, the thing to do would just be guess where we are this week for next week. I really do think that would probably just be the best thing to do. Probably the best indicator for that. So, all right, we got you at 2058. That will be the option pit guess. If you win, that means Andrew or Sebastian will get to go first next week. If I win, I guess I'll get to go first next week. If I'm not here, Mark will, because I'm effectively Mark Longo today. There, let's see. And then we like to look in the chat and see what other people are guessing. Options Queen, who's a master at this, is at 2135. She's a little bit lower. Mr. Unlimited, who had to leave for a haircut, he's at 2077. I don't know if and personally, I think he scheduled his haircut when he heard there was a guest host today. So we made it through the hour. Is there anything you'd like to? This is your chance to plug anything. Let people know what you're doing. If you've got any webcasts or anything else coming up, this is your free moment. This is your ad.
Well, I don't have too much going on the show business side, but I do my shows every week at Option Pit, and I've got my Turbo Income product, which is very income focused. So my background is a little bit of everything, a lot of long options, a lot of short options, and the income game is kind of my focus. So very much that has been my big add to Option Pit, but we do other things in it as well. We're always doing, I can't help it. I'm a degenerate trader. So I'm always kind of doing trades, all kinds of trades. So, come check it out. If anyone's listening and looking for that kind of income approach, come and check it out. Everybody could use a bit more income, right? Why not? With inflation the way it's going, with these tariffs, right, you need to generate some cash flow, and quick. So thanks for having me.
Are not getting any better.
No, it doesn't seem to be. And so, thanks for having me. I really appreciate it. It's been good fun.
It's been great. I am sure it's not up to me, but I'm sure we will hear from you once again. And I believe, unless I'm told otherwise, that is the end of the broadcast week for the Options Insider Network. Typically, sometimes there's a program after this, but I think Mark's on his 4th pina colada or something on the beach, driving around in the Mustang convertible. So I think this is it, and I haven't gotten a note saying that I was wrong. So
he didn't even call in to say hi. I can't even believe it.
I did not expect that. So did not expect that at all. So, all right. Well, with that, Hans, I greatly appreciate your help. Gene, you've done a great job on the board, and we'll see you guys next week on the Option Insider Network, and I'll see you next week on Vol Views.
Take care, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.